What's going on YouTube? Welcome back to the weekly Forex Outlook and Reviews. I hope you're doing well. And of course, I hope you've had a fantastic week. The markets definitely have been providing some phenomenal opportunities for us to take advantage of. And I sure hope that you have been patient, remain disciplined for those opportunities. Remember, the biggest asset we have as traders is, of course, our risk management and the ability to make decisions, which means to remain patient and disciplined. This week, I've been focused on my risk to reward, which is something that I've been focusing on for a very, very long time as a trader. But this week specifically, I've been focusing on still trying to maintain as much consistency as I can with my trading plan. But at the same time, just holding my trades a little bit longer. And that's been one of the things that has been one of my bugbears as a trader. Every trader, I'm sure, has their own bugbears, but that for me was one of them, which was holding my trades. I first went from trading consistently 1 to 3 risk reward ratios. So that's how you probably will know me or know me as a 1 to 3 risk reward ratio trader. And then slowly but surely, as my account size increased, so did, or the opposite happened to my risk to reward. It started to decrease. Now, in theory, that makes sense, but I've had a long battle in the back of my mind, and I've asked myself what really has changed in terms of the process and the application to my trading, other than the fact that the account size is getting bigger and bigger and bigger. And I thought about it for a very long period of time. And the truth of the matter is absolutely nothing. So instead of settling for just 1-to-1s, 1-to-2s, I'm now pushing the boundaries again. I'm going for those 1-to-3s, 1-to-5s, and where possible, even bigger. I will still obviously be making sure that I'm managing my risk accordingly. I'm not letting profits fall out of my pockets. I will be taking partials when need be. I will be trailing in when need be, but based on the structures of the market. And just being able to rely on risk to reward in itself, which is something I've been preaching about for years on years as a trader, as a mentor, is that it doesn't matter if you lose on Monday, Tuesday, and Wednesday. You can still come back Thursday and get yourself back to a break-even place, which is really, really comforting to know, especially as a trader. You know that you're not going to win every single trade. So I'm going to be settling, or not settling. I'm going to be going back to that approach again, trusting the process, as I continue to say, and just focusing on capitalizing as much as I can, because the real art of trading, in my opinion, is making informed decisions when to enter the markets. And then the rest of it is all mental in terms of holding your positions and targeting targets like structural lows and highs, close of candles, without doing anything impulsively. And I think if you can master that, then you probably can master most things in life, because if anything's going to trigger you the most, I think it's going to be trading. But anyway, today we're going to be going over the 10 pairs that we usually go over, which is pound all the way to gold. I did say last week, let's color code these. We didn't, so we'll color code them today. But before we do, let's take a look at the news and see what's been affecting the markets. We have seen a very strong close to the week for the dollar. And that, of course, was due to the core retail sales, and which was very positive for the US economy, which is really important, obviously, as an indicator that consumers are spending money again. And as the consumer spend has a lot to do with the percentage of the US GDP, we can see that dollar did actually strengthen, which is really good. In terms of the news next week, let's take a look at that and see what could affect the market. So here you can see, traders, I have the red news boxed off in red here. On Wednesday, be mindful of this, around 7 p.m. So this, I believe, is the UK time. We have FOMC news. This may not be UK time, actually. Regardless, maybe forget the time for a moment. Just focus on the red news. But we have FOMC statement, which is looking like it's going to be an actual forecast here. And if we do have the actual, should I say, as being as predicted, then we should see a continuation of that dollar strength in line with that core retail sales, which would be absolutely fantastic. It's really nice to see that on Thursday we're going to put a rocket up euros beep, because we've seen some real slow markets from the euro. So let's see what happens here. We have some German flash manufacturing PMI news. The actual forecast, well, I don't know how well this is going to impact the euro. If anything, again, we'll just be backing against it and really be focusing on like the yen or the US dollar, but we shall see. And then at 12 p.m., we have some pound news. Now, to be brutally honest with you, as much as I don't want to say this in terms of the monetary policy statement, I would much prefer to see negative news from the pound so that I can just focus all of my attention on the dollar. If we get some good news here in line with the core retail sales, and as I said last week, if we get good news from the dollar, then we can really just zero in on taking advantage of that dollar strength. But we'll see. Just be careful that this is the news next week. I did fail to highlight this one here on Friday at 3 p.m. But I'm just hoping by Friday, 3 p.m., most of us will be out of the markets and we'll be living our best life, a 3-day weekend. But let's head back to the charts and do the analysis for this week. Okay, traders, so we're back here on the charts and let's take a look at what happened last week. So we'll start off with pound USD. Now, the first thing we can see last week, or well, not from last week, from a little bit away from that, the middle of the month, should I say, which was last week, we can see that the pound continued this bullish move back to the upside. We had this structural high that was formed, price ball back into these previous structures here, continuing that theme of following this uptrend to the upside. And then as you can see here, we had a reaction where the market failed to break, but we maintained the higher high and made the new high. Now, at this stage, when we're looking at the markets, what we're anticipating is the market to continue to make an uptrend, to trade above the previous structures, to retest and then continue higher. But you can clearly see that didn't happen. Now, moving into the middle of the week, we can see that the market broke out of the structure and then eventually broke back into structure, breaking below the previous low. Now, I just want to make a very, very important point here for all of you traders that focus mainly on price action, like I do myself. When the market breaks a structural low, that's when you invalidate or can start to invalidate the uptrend. And when the market breaks a structural high, that's when you can start to invalidate a downtrend. Please be very mindful of that. Now, in terms of trading, some of you may be looking for price to break structures and then look for immediate retests based on lower time frame analysis. So looking for structures that resemble your lower highs and your continuations, and that's completely fine. But if the market is coming off of the back of an uptrend, we've just broken the first higher low in that uptrend, view this as a sign that the market potentially will start to reverse. And what you want to wait for the market to do is create a true lower high as part of the new downtrend in anticipation of the new lower low. So even though you can look for sells here as part of the previous momentum, what you want to be doing is you want to wait for the market to create true structure. And as I always say, in order to identify true structure, visualize the market creating a wrap around a box. So instead of just being price breaking a structure and then just coming back, wick rejections and then continuing down, wait for the market to create a level where it pushes, then a pullback that's visual in anticipation of it traveling around a box and then anticipating it to continue down. So in this instance, we have price pulling back. We have this visualization of this box here. And then what we're anticipating is price to wrap around and then continue down. Once you have that information, traders, now we can invalidate this uptrend because the low has been broken. The behavior, which was a breakout break back in, has formed. We have momentum shift, a break of structure, the wrap around. And then now what we're looking for the market to do is create a break at the low, come back, retest structure, give us a bearish signal. And then at this stage, it's up to you. You can scale down. You don't have to, but you're just looking for momentum in your direction to take the trade, place your trade, and then enter something like this. Now, this is not just applicable just to the 4H timeframe as we're analyzing now. This is also applicable to any timeframe you trade. The same theories apply. And I'm sharing that information with you because, listen, trading is super simple. And if you want to trade and get consistency, all you have to do is stick to one trading approach, identify one or two patterns that work on a regular basis, and just wait patiently for them to develop. If you want to get into the theory of understanding structure and market behavior, which is something that I pride myself in, then here is a little lesson for you to be focusing on. Make sure that the higher low is broken first. Price creates a true pullback and a wraparound to illustrate the new lower high. Wait for the low to be broken to form the low, and then look for the retest of structure. And this is how we focus on simple break and retest trading. Now, that could have been a lesson in itself on YouTube, but that is just part of the morning Forex outlook and reviews, or what I said morning. It's morning for me at 6:30 a.m. in the morning, but the weekly Forex outlook and reviews. So if you enjoyed that, please, traders, smash that like button for me. Let's get these weekly Forex outlook and reviews to 1,000 likes, if not more, but 1,000 will do. Subscribe if you're new, welcome to the channel, and turn on notifications for future videos. So now that we understand that, let's focus on the analysis. We know that price created the first indication here of a potential reversal. It was confirmed here based on the break of this low. And even better still, now we have 3 points of contact where we have a structural high, lower high, and a new low. So this simply means that the structure of the market has gone from being bullish to now turn into bearish. And we also know that the strength of the dollar has increased due to the core retail sales news. So my focus next week will be on sales with the dollar. What I'm looking for the market to do is two things. I'm looking for the market to come back to a retest level. Let's get this cleared up. That looks pretty decent, doesn't it? I'm looking for the market to come back to a retest level. So as price breaks a resistance, as price breaks support, it turns resistance. That's the theory. And or to come back to the previous lower high as the last area in the market where price can tap to make a double top continuation down. Only until 38.10 is broken will I invalidate the downtrend. So next week, my focus would be to see price come back into 37.82, which is my preferred area of contact, to then see a continuation of this bearish move back down to some of these structural lows. Now, the range from where price is now to where price can come to is roughly around 48 pips here. So it's not too shabby of a move. But if we do pull back, which means we can get in cheaper, then we increase the range by almost double. And that is a much better risk reward ratio here. It's a safer trade as well because you can tuck your stop loss in behind key levels, or you can tuck them in behind the major structural lower high, where there's a much lesser chance of price stopping you out before continuing down. Now, if you're an intraday trader like myself, and you're looking to take intraday trades based on large time frame entries, then my advice would be to identify that this is a very strong downtrend on most intraday timeframes here. And what you're going to want to see whilst it's in a push phase is the pullback to some major levels before the continuation down. Never sell the market in a push phase. Always wait for the exhaustion and then look for those multiple wick rejections for a continuation. So that would be my analysis on pound USD. The next pair that we'll take a look at is Aussie Dollar JPY. Now, one thing we did identify last week was the shift in behavior with Aussie Dollar JPY. We did identify that the trend in the market was pushing bullish. And for the first time in a long time, I think it was since the 20th of August, we had a brick wall break here. And what I mean by a brick wall is that this is just viewed as an area in the market where price is failing to break below. So I call it a brick wall because I like to liken the candles to our soldiers. And once our soldiers eventually cross brick walls, whether it be a trend line up or brick walls to the downside or brick walls to the upside, more often than not, once our soldiers get across it, you will see a continued momentum shift in that direction. And as you can see here illustrated, once the soldiers got across this brick wall, you can see the continued direction was down off of the back of this uptrend. It is just a way of looking at the market, as opposed to just saying trend line, trend line, trend line, or support and resistance, support and resistance, support and resistance. If there's a debate that's going to go on in the chats below, it's all the same thing. I just like this kind of analogy because it really helps to solidify strong focus in the market to make sure that your soldiers really have crossed the brick walls to then look for the continuation direction after that they have crossed the brick wall. Anyway, we said last week the trend was up. We also identified that price was failing to make new highs. Once the brick was broken here, there was a very high chance that we'll see the momentum of this market continue bearish. And we also identified that the Aussie dollar was weak in confluence with Aussie dollar USD and that the yen was strengthening, meaning we're looking for continuation sells. So that is exactly what happened. The best move that you could have taken last week, which was, I think, around this area here, was identifying, if I'm correct, was the 14th. Yes, it was. And I did have it marked up. I really do not know why. I cleared off my charts here. But I think we had a level here in the market where we wanted to see price break. And once we had this break, then we was looking for the retest of structure before the continuation. Maybe it wasn't this pair that had the perfect retest. I think it was something like EJ. But we can see that the market has continued down. Anyway, regardless, the point is this. We have an area in the market where price is now failing to break. So in line with a downtrend, what we're going to want to see, of course, is a new low being made to identify a continuation of this momentum. So a shift below this key level and then price coming back to around 79.84 would be a great retest of the structure to look for a continuation down. At the moment, it is consolidating. And of course, we need to isolate an area where we'd like to see price come back to if it does want to retest. This is going to be your retest in the market and in and around this area here. Now, the reason why I say this area here is because this was the initial move that triggered this downward movement. This was the lower high that was formed within this consolidation area. This is not a confirmed lower high until the low has been made, but the initial move stemmed from this structural high. So what you may see in the market, because this is where the orders probably were sitting at the time, price is going to want to come back into these areas here if it is going to pull back before continuing down. And I think based on what we've just said, this makes a lot of sense that this will be the retest area here in the market. So also, if we don't break 79.92, we have a gap up or we have price pulling back. And I think the area that I'm going to be looking for here is 80.76.2 for a retest, and then to look to see the market continue bearish from this level back down is 73 pip range, which is pretty huge. And if price then does start to break back into these structures, I would avoid trading, period, because for me, this is not where we're going to get the movement. This, to me, is where we will get the movement back down. But what you have to understand, traders, is by the time price gets back to this level up here, we would have already created a trend up. So if it does come back to these levels, which it may, I wouldn't be surprised if it does, but if it does, then what you'll need to look for the market to do, again, is remember, break the lows, create that wrap around, break the low, and then look to trade it once you got confirmation that the new trend is forming down. Any deep pullback, I will start to get suspicious of, especially with this momentum shift, this brick wall break, these lower highs that are being put in, the momentum is really strong down. So I think the focus now would be to see price breaking 79.92 or at least coming back to 80.76 before then seeing a continuation back down to 79.92. That will be the plan with Aussie dollar JPY moving into next week. These levels, as I said, just be wary of them because this is the level where price clearly found enough momentum to shift. But I do believe this is where it stemmed from here because of the sideways moving market. So just be wary of this. Let price either clear this to the upside if you want to buy, or even these for buys, and or look for the retest of 80.76 or 79.92 for continuation sales. I think buys could be taken off the cards, period. Look, let me keep it simple. 80.76 retest and 79.92 retest. That's it. Simple. Just remember though, traders, this analysis is of my own opinion, and it stands for about 24 hours from the market opens till the close of the New York session on Monday. So make sure you're waking up on Tuesday, Wednesday, Thursday, and Friday, clearing your charts and doing your analysis again, which is something I do every single day. So this is the plans. Of course, if the structures don't majorly change and your levels are not violated, then you can keep it. But if they are, you must just period. Just clear them in the mornings. Okay. The next pair that we'll take a look at is pound JPY. Now we can see with with pound US dollar here, that we have the same structure again that's forming on pound JPY. Now, it was only last week that we identified the weakness on this pair. If you remember clearly, we were talking about this uptrend. We were talking about price failing to maintain highs. And we did say that with the depletion that we're seeing with pound USD in line with the confluence that we're seeing here with pound JPY, that there's a very high chance that we'll see the market turn bearish. Now, the thing is with pound USD, we've seen very sharp movements to the downside due to the core retail sales news. But that wouldn't, in theory, impact pound JPY unless we're identifying also pound weakness as well. Now, remember, we've got news on the pound next week, and I did say that I would like to see the pound weaken just so that we can focus more of our attention on USD strength, which makes it so much easier to trade, period. And of course, if the news is bad for the pound, then we will be relying on the yen, or the investors will be putting their money over here and taking profits or taking their money out of here until the market conditions or the sentiment of the markets change. So the point I'm trying to make here is I would love to see a continuation of this bearish move. And just to confirm that for me, so I'm on the right side of the market. As I said, with pound USD, I really would like to see price leave this area just for a short period of time, come back to it. And then once we come back, look for that retest and that continuation down. We have broken it, but we can have a break back in. We can have price break back above structure and find the retest and then continue higher again. What I don't want to do is get trapped in this range or be trading trapped in this range. So the wisest thing for me to do next week is to see price leave for a period, and it doesn't need to be long. I just want to see the sustainability of this bearish behavior and then look for the retest of the structure in and around here. Now, because this is a consolidation, a retest of the bottom of a consolidation for sales is a very, very wise move. And if this bearish movement is going to sustain, then so will this level 151.19. If it doesn't and price starts to break in back into it, then boy, oh boy, it's probably best you stay away. Now, usually what we would say is you would look for price to come back to the last lower high to look for the retest before the continuation down. But what you don't want to do here is think that this is the lower high or confirmed as. Remember what I said, you're looking for the market to break a level to confirm the bearish momentum and the full well, I was going to say full evidence, but it don't really make sense. But as much evidence as you can to confirm that the brick wall's been broken, the bearish behavior definitely is evident, and now price is going to maintain that by creating the lower high. Once we have this wrap around, what we're then looking for the market to do is create a true lower low and then come back to retest. So I want to see that behavior because, okay, I'm getting evidence that pound is weakening because of GU. But is that because of dollar strength? I'm also getting structural changes since last week, Sunday, because analysis was to be careful of this uptrend on both pairs and and monitor for trend changes to the downside, which has happened. Now, what we want to see is just confirmation of that. Now, remember, right? You might be saying, well, what if it takes a day or two to come back and then retest, or it just retests now and continues down? Listen, the market's open on Sunday. That does not mean you need to trade. And just because your full day of trading may start on Monday, that does not mean you need to trade. If you wait patiently for the market to create that retest by Tuesday or Wednesday, and you get into a trade with true evidence, and by the end of the week, price pushes back down to some of these lows because now we've found enough liquidity to push the markets down. There are enough sellers in the market. you take the trade, you place the trade, you put your stop loss above structure, you get into a really nice entry, and then you target these lows. Even if you had to wait 2 or 3 days for this trade, just this is as an example, look here, you can walk away with 4R. Now, I don't know about you, but my 4R is not looking too bad. And if you're trading with, let's say, 100,000, then your 4R is not looking too bad either if you're risking 1%, or even if you're risking 0.5%. So let's never forget, less is more in this business. Do not rush to get into a trade just because you have the urge to get into one. Be patient, wait patiently, identify the confirmations and the signals that you need, then enter. Because if it's going to go down, it's going to go down. You don't need to be first or second. Third is completely fine. So that will be my analysis on pound JPY moving into next week as of now. Next pair we'll take a look at is USD Swiss Franc. Now, we know for a fact that the reason for this market pushing as bullish as it has above this key level of resistance here is due to the news, which is completely fine. The only trouble we have is that this market has pushed for a long period of time without pulling back. Now, I always say that if the markets are pushing bullish and it's trading above the brick wall, then just buy as much as you possibly can, because guess what? There's a very high chance it's going to continue bullish. What a lot of traders find themselves doing is identifying that the trend of the market is pushing bullish. They look to take a sell. The market pulls back, then continues. They take a sell, pulls back, it continues, it pulls back, continue. Now, some of you might be laughing and saying, who does this, Rock? Who does this? Well, I'm telling you now for a fact, a lot of traders do. So if you find yourself looking for those reversals or those key levels, or trying to spot where sellers are, etc., when the market is trending up, then more for you. If you want to find consistency and profitability in your trading, the best thing for you to do is just trade in line with the behavior of the market, even if it means buying here and putting your stop loss here, and you're risking 1,000 here, and price pushes up this much and you make 200 or 300, guess what? It's better that you make 200 and 300 than trying to sell the market now, putting your stop loss here, getting stopped out and losing 1,000, and then the market continues up. Like, it's just stupid. So the point I'm trying to make again is that the market conditions are bullish. After we broke out of this consolidation high here, we did have evidence of the market creating that high and high low. I'm not sure if I illustrated this last week, but that is clearly what is happening. And now we've had that break close below a key level. Once you have that bullish close, and that is another point as well, traders, make sure you wait for those closes on those candles. A lot of you asked me this question, and I just want to make it clear that it's very important that you wait for candle closes, no matter what time frame you're on. I can promise you it will remove impulse instantly. Another tip for you: if you wait for candle closes, you will remove impulse from your trading almost instantly. Try not to enter on an open candle. Try to wait for a strong momentum candle, looking for evidence of wick rejections, indecision candles, and then bullish or bearish engulfing candles to look for those trades. Here is an example of this. We have a structural low in the market. Price found support, higher low above the previous, another higher low above the previous. This is indicating bullish behavior. Even though you may not be taking trades here, you have a strong breakout bullish close. Even if you place your stop loss here, some of you might be saying this is 45 pips. But like I said, listen, you're here to make money, not talk about pips. Pips lie. Percentage doesn't, okay? Focus on the percentage, not the pips. All of you getting gassed by people making 120 pips on trades, man. Come on. Focus on the process and not the pips. Here we have a bullish close above a key level that failed to break for a long period of time. And what do we see? A bullish continuation in line with dollar strength. This is a super easy trade to be taken. Now, if you're not taking this trade, I can assure you that this is a beautiful retest once scaling down to your intraday timeframes. Let's go as low as the hourly. Well, no, maybe 15 minutes. Probably not as beautiful as we want here, but as you can see, we have price. Let's remove this box first. We'll do this. We have price breaking, closing above structure here. We then have price coming back to the key level with wick rejections. And what you're looking for here is a momentum shift up in line with the previous behavior. And what I like to do is I like to enter with momentum. So I like to use buy stops and sell stops a lot. And then what I'm looking to do is take a trade, something like this, to look for that shift after we have that intraday retest here, as you can see. And then look for the market to shift bullish. Once the market shifts bullish, then that's when I get triggered into the trade. There's a much higher chance that the market will continue higher. And then I enter, and then whatever else happens, happens. Anyway, whatever. I know this continues up because I've seen it on the higher time frames, but that is how you want to be entering trades. It's up to you. So that's USD Swiss franc. So the point now is this: price has been pushing bullish for a long period of time. What I want to see now is price come back to this key level for that retest and that continuation higher. If it doesn't come back, then what I'll be looking for while price is in the push phase is a pullback to maybe around 50% of this push phase here. Or I'm looking for price to find some sort of intraday retest, looking for intraday higher low retest and a continuation up. But for now, just keeping it super simple. We know we're looking for buys based on the consensus of the market. And I believe that this is a really nice retest level to look for that. The strength in the dollar may be very, very strong that we may not find this pullback. But as I said, that is down to you to look for your trades. I'm just giving you my bias on where I think it could be going moving forward next week, which I think is more likely to go up than it is to go down. Yeah, I thought there was something wrong with that. So this will still stand, period. So that's a retest of the consolidation here. And then we have the 50% retracement, which is going to be in and around this area here. So 50% of this move, I think, is roughly, I would use this whole area, and then I would look for price to pull back into here for my intraday retest of these previous structures, and or a pullback to 92.33 for a deep retest of this structure. Let's move on. Next pair we'll take a look at is Aussie Dollar USD. So we did speak about this last week as well, traders. I'm not sure if you're aware of that, but we spoke about price trading above the brick wall, just like with Aussie Dollar JPY, failing to break. We saw the break of the brick wall. We anticipate a continuation down. And then look here, traders, we have a beautiful trade. So this was the pattern I was looking for on Aussie Dollar JPY, but here it's on Aussie Dollar USD. We have a really nice break, retest, strong bearish momentum candle here. And then look, the market continues bearish. We know that the dollar is super strong and Aussie dollar has been weak for a period of time. So I think it only makes sense that we look for continuation sells. I would still validate at this moment in time, this level to be the retest level. So if price wants to come back, we can come back for potential double top and a continuation. And while price is broken below this low, and this does in theory become the low, and this is the lower high, I still wouldn't be biased to looking for retest at this structure if it did want to pull back deeper. So using this as an area to look for retest and then a continuation down. I do believe that the momentum with this pair could continue to rally this market to the downside, if that is the correct word here, because of how weak Aussie dollar is. And if we do, then I'd be suspecting the market just to continue pushing lower, back down to some of these lows moving into next week. If we do, that will be absolutely insane. I'm not saying it will, but if we do, it'll be insane. And again, what you have to be thinking about, traders, is if the market is going to continue bearish, let's move these over next week, and we are going to get to some of these targets. Let's just move this over here. Right. And we are going to get down to some of these targets. Then from where price is now to where price could potentially go is around 142 pips. And I could tell you now for a fact, if this was my 142 pips and I took advantage of this whole move here back to the downside, I'll be looking at least minimum 1 to 14. And if better, maybe 1 to 21, 1 to 28. Now, I'm not saying that's what I'm going to be doing, but based on how I enter, especially the range of Aussie Dollar USD, there is so much opportunity to be taking advantage of sells. So don't rush to jump in, especially while the market's in a push phase. Wait patiently. We have 142 pip range back to the downside if we continue bearish, and look to get in a little bit cheaper on a pullback, and or wait for structure to create true structure before then jumping into the trades, because what you want to be doing is catching the continuation phases, not the pullback phases, which is very likely when the market is pushed. So that's how I plan to trade Aussie Dollar USD. Next pair we'll take a look at is USD JPY. I mean, look, with strong dollar now, definitely evident in the market, and also JPY showing signs of strength as well, there's a very high chance that we're just going to see this range, which happens all of the time. Now, we did mention looking for sells last week on USD JPY. We did actually mention breakout of the higher low, but if you were looking for sells, you could, because once price bounces from a ceiling, we expect it to come back down to the floor, and vice versa. Once the market comes back down to the floor, we expect it to go back to the ceiling. So at the moment, I would say with a strong dollar and yen, it's probably best just to wait for a clear break of the higher or the low here to make a decision. And as of now, I think we should just step away from this one and wait for something a little bit better to be looking to trade. Next pair we'll take a look at is Euro JPY. Now, we did mention that the Euro has been showing no signs of strength. And last week, we saw that the brick wall had been broken. We also saw that price was failing to make the highs. And what we're looking for the market to do is break structural lows, nice deep pullbacks, double top patterns here, or break next structural lows to confirm this bearish move. Look for price to pull back, a nice pullback here. Look for the retest and then a continuation. Now, sometimes you'll get a retest that will give you an entry. Sometimes you won't. That's what multiple time frame analysis is all about, and scaling down. So if you're an intraday trader, you know what I'm talking about. If you're not, then it is what it is. But as far as I'm concerned, there's always a trade on a pullback, especially at key levels, and also when there's wick rejection. So unless you know how to do that, then probably it's not, maybe it's probably not part of your strategy. But as of now, what we can see is the structure is sell bias. If you are looking just to trade the higher time frames, then follow your rules. If you scale down, then obviously understand your processes and patterns. Now, the strength of the market the sentiment of the market is illustrating yen strength. Clearly, we're also seeing signs of euro weakness. We do have news for the euro next week, and we are hoping that it is really bad for the euro, because if it is, then we can be selling the absolute pants off of euro yen and euro USD, and that would be phenomenal. Easy trading next week if that happens. So what I'm going to be looking for the market to do is break a low again, just to confirm that continued momentum shift, get back to a level in the market where we find the retest, get in cheaper, and then look for a continuation back down. This is where I want to see the market come to at some point, and that's where I'll be happy after a break of 128.76. The next level that we'll be looking for is for price to come back to a retest level. Now, I will say that this retest level is the most relevant, simply because the market had a range here. We broke out, then we ranged again. So I'm always looking for price to come back to a retest of a previous range. That also will add confluence to the trading idea here as well, because what we have is a structural lower high, not confirmed, by the way. And then if price does come back, we have a double top, which is a pattern. The process will be identifying a trend down, a break of the low, a potential lower high that's respected as a double top, and then we anticipate the lower low. If that's the pullback, then I'll be completely fine. But I want to see price pull back deep enough into this level and respect the structure before continuing down. And as I said, when it comes to consolidations, there's a high chance that price is going to get back to these levels before continuing bearish. If it doesn't, due to the weakness of the euro and strength of the yen, then a break of 128.76 and a retest for a continuation back down seems like a great plan. What is the range that we have here? 70 pips, absolutely phenomenal. You easily get a 5-pip stop loss with euro yen, and you're laughing all the way to the bank here with almost a 14R return. But you don't have to use a 5-pip stop loss. I'm just saying there is an ample opportunity to get into sells with these markets. Let's move forward. Taking a look at USD CAD, we can see the dollar strengthening here. I mean, look, the consensus of the market has illustrated to us that it has been making higher highs higher lows continuously. So that means that, the support from the buyers has continually stepped into the markets. Remember, buyers want to get in cheaper and cheaper and cheaper. So we're always waiting for pullbacks, filling orders, filling orders, filling orders, filling orders before the market moves up. So with the structure of this market, even though it does look very familiar or very similar to USD/JPY, I do think that we have more of a chance of looking for buys here in USD CAD due to the fact we know the dollar is strong. We don't have much from the CAD, which we don't really need to focus on, to be honest with you, as much as we have evidence of yen strength. So the idea would be to see price sustain this break above this consolidation in line with this movement to the upside here and come back to retest some of these structures around 27.27 before we continue higher. That's a very simple plan, and it just makes sense. If price comes back to retest, we look for the continuation based on the behavior and the consensus of the market sentiment. So that is my analysis on USD CAD. Next pair we'll take a look at is Euro USD. Now, we did mention this last week as well. Euro USD has been showing signs of weakness along with the yen, Euro Yen. We had a break of the brick wall, and now, as you can see here, we have price breaking structural lows all the way here. And once price starts to break these structures, you're looking for retests, patterns, or just the consensus to indicate bearish sentiments, looking for retest of structures here, and then looking to take these trades. So we know that the dollar is strong. We also know that the euro is weak. We also know that price is in a very strong push phase. This is the previous retest level in the market. I'm completely content to stick with this as being the main level here in the market. And I'd like to see price pull back to this level to create a retest of the structure, which will just add confluence as a pattern as well, which would be a double top. And if we don't, then at some point in time, once the structure forms, I will be anticipating moving into next week that the market will continue bearish back down to some of these lows. As long as the dollar remains strong and the euro remains weak, then there's a very high chance that we can continue bearish. This is a 56 pip range, which is not too shabby. But of course, I'm looking to get in cheaper. So I want to see the price pull back to the previous level where it broke. This will be classified as your break and retest level or a deep pullback into 1782. We shall see how the market develops next week, but as of now, that will be my plan with Euro USD. Final pair that we'll take a look at is gold. Now, gold has been providing some goods, but it hasn't been the easiest market conditions to trade for a while. As you can see, all the way since the start of August, we've had mini ranges, then bursts, mini ranges, and then bursts. We haven't had much trend in market conditions, which has been a little bit of a pain. We do know that we have something in our favor right now, which is the dollar strength. And currently, we can see that price has come to structural highs. You can see here in the past, and trading below it. Remember, this is an area in the market, guys. This isn't a single line, but this has remained the brick wall for a very long period of time. And we can see now that the markets are breaking structural lows, indicating this bearish sentiment. So with that being said, I will be looking for continuation sells next week on gold, at least back down to some of these lows around 1725. It will be really nice to see the market get back down here. And what I'm going to be looking for personally is price to pull back, to create a deeper pullback of this push phase here. I'm usually looking for around a 50% retracement. So an area where we can find rejection. So something like this, then if that doesn't play out, I'm looking for a break of the support that it forms. And then I'm looking for the retest of that structure to then see the market continue bearish, which would look something like this. Now, gold is not the easiest of symbols to be trading, so just be very wary of that, traders. But when it does provide the goods, it really does. And then, as I said or spoke about in the beginning, that's where risk to reward comes in. There are times where you will be taking trades and you will be stopped out. But if you're using really good risk to reward ratio, guess what? You have a weapon in your arsenal to be able to not manipulate, but extract as much as you can when things line up in your favor or play out in your favor. Because the odds of us winning most trades is always going to be 50-50. But with the edges that we have, which is our patterns, our processes, and our risk reward ratio, we can increase those odds because obviously we know the market repeats itself over and over again. And all we need to do is capitalize on it by using good risk to reward and or good risk management, closing trades at the earliest signs, but of course holding trades when there are signs of continuations. And I think we had this week on gold, I managed to get into a position, I think it's the start of the week, or maybe it was Monday, Tuesday, one of those two, around this area here. I could actually tell you exactly where it was. Oh gosh, this is long. What have I got myself into here? So I'm just going to check my history on this gold trade. So 1791.45. $17.91. Oh geez, I was 17. Let me just make sure this is correct here, so we're not pulling no wool over no one's eyes. 1791.45. Yep, exactly. There is where I got into the trade. I have my stop loss above the structure here, and this is how I sold it. Now, of course, I didn't get the whole move here, but I did get a really, really nice risk to reward ratio of around 1-4. I prematurely closed the trade. I should have held it until the candle closed, but it is what it is. It happens. But you can see here, this was my best trade last week. Sometimes traders, you are only going to get 1-1. Other times you're going to get 1-2s. Sometimes you're going to get 1-3s. But as a trader, what you're aiming to do is to minimize risk at all costs. And then when that day comes where the markets just rally in your direction, then that's when you make the big money. So up until then, what you're doing is you're trying to maintain your account size, focus on really strict risk management, cutting losses, taking profits along the way to slowly build up your account, make sure that your equity curve is moving up. And then when these trades come, these are the Lamborghini, Ferrari, mansion, build your dream trades. They don't come often, but when they do come, this is where you make most of your money. So during the phases when the market conditions are bad, don't force it. When they're decent, just try to do as much as you can. And when they're really good, capitalize. I mean, I didn't hold it to the close. More fool me there. But I still got 1-4 from this trade, a 1-4 risk reward ratio from this trade. And that's what's good. So traders, that's my analysis for the 10 pairs this week. I hope you have enjoyed the outlooks. Please, if I can ask you just to smash that like button for me, get me to 1,000 likes, subscribe if you're new to the channel, and welcome. I hope you've enjoyed this. Turn on notifications, traders. And as I always say, firstly, have a fantastic weekend. Secondly, I hope you have a banging next week trading. And finally, continue to trust the process.